You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are watching the Financial Survival Network. I'm Kerry Lutz. Well, we're 2 days left till the champagne bottles come out. Maybe the best thing to celebrate about 2021 is that it's over. I mean, for me personally, it's been a great year, but I know for many of you out there, it's been a struggle from January 1 to December 31st. Well, we hope this will be better for you, but perhaps after you hear my next guest, our good friend Craig Hemke, TFMetalsReport.com, you might feel better, at least about precious metals. Craig, it's great to have you back on. I've been watching, it's the 29th right now. Been watching the action in gold today. It was getting a big beatdown in the beginning of the day, and things have turned around. Is this perhaps an analog for what's coming in 2022?
We can hope so. In the very short term, it's quite frustrating. As we exited last week, we knew the tax loss selling in the mining shares was over with, right? And the daily chart looked pretty good in the shares, and the metals were moving up, and gold got above all of its key moving averages, and it looked like the dollar was on the verge of breaking down below 96. And I thought, okay, you know what? We're going to have a good week next week. This should be fun. We'll at least end the week on an uptick. That lasted until about the COMEX Open on Tuesday, where we got up to about 23.50 in silver and 18.20 in gold, and then down goes Fraser. And now, as we record this today, hey, look, we got that break below 96 in the dollar index, just like I thought was going to happen. But yet gold was already $30 lower from where it was 24 hours earlier. And so, so it bounces back up only a little bit. Hey, there's 2021, encapsulated right there in the last 24 hours. Kerry, you get all this kind of what should be gold positive news, right? Mm-hmm. And instead you get jacked. And it has been, as you said, a frustrating year. I remember joking with you last year about how I don't usually celebrate New Year's Eve. It's like, come on, really? Was the year that bad? And you got to go out and get loaded, but last year I was pretty happy that 2020 was over. I think with most everybody else. And unfortunately, 2021 on so many levels has not been any better. And so I think I'll go get loaded.
Okay, well, I was actually in the hospital New Year's Eve.
Oh, that's right.
2021 with a certain global health issue struck me down, the coronavirus. And I got out on the 3rd. So to me, this was a great year because I was still alive. And I got to enjoy a lot of different things, new house, new kid, grandson, business good, all these things. But I know it was a struggle for many of you out there. And unfortunately, I don't see 2022 being much better. It's just never ending. One thing I wanted to talk about, though, before we get into precious metals prices, I've got a thesis for the coming year that we're going to see wage and price controls. All right. I really believe it. I think they're going to blame it all on the evil capitalists and those rotten speculators who just screw everything up, and they're going to implement them. But I think we've already got stealth price controls going on in commodities, because I think that gold and silver, and to a lesser degree platinum, have been the analog for the way that commodity prices are going to be attempted to be controlled into the future, where you let them run up, you see that they're technically weak, and then you blast them and they crash, and then you go up. And we're going to keep on seeing this over and over. I think we're seeing it in oil again right now. It's going to go up. Maybe it'll hit 85. And then, miracle of all miracles, it'll have a technical breakdown and it'll be back down to 66.
Yeah. I mean, absolutely. I mean, you've got that, you got that pricing system that not only dominates gold and silver, but so many other physical commodities, where the trading of the derivative contracts is somehow passed off as trading of the real thing and is allowed to set the price for the real thing. And so, yeah, no, there's no doubt about that. You can look at all kinds of commodities and think that's been the case for the last 10 years. I'll tell you one thing that I will be watching though, Kerry. I saw just yesterday at Zero Hedge, they had an article about Chinese rate cuts and Chinese liquidity and what they call the Chinese credit impulse. And this is something that I've been kind of following this all along this year, because that thing they call the credit impulse has been falling most of this year. And I thought, I wonder if that, was going to be a problem. And it seems to be part of the problem. And it's mainly just a decrease of liquidity, meaning a lack of buying of everything from the Chinese. Well, that credit impulse now is pulled back to levels from which the last 15 years or so it has bounced and turned back higher. And buried in that article at Zero Hedge, they had a chart that showed that. And the last couple of times that it's bounced from this level was in late 2015 and into 2016. Well, that was gold went up 30% and the mining shares, everything rallied that year. And then beginning in early 2020 into late 2020. Well, we know what happened then. Mm-hmm. So we may be getting back into, and that's what this Zero Hedge article kind of postulates, we're maybe getting back into a Chinese loosening, the credit impulse rising, where they then just go out and acquire everything. And that may, not only will that drive higher commodity price, that could really exacerbate the inflation problem that we're seeing. And I'll give you one more, Kerry. I've been watching and actually trading a little bit some of the agricultural commodities, because on a long-term historical basis, 10, 15-year charts, they've been breaking out. And you look at things like wheat, soybeans, corn. I mean, all these are major, not only finished good inputs, like corn syrup, things like that, but, they're also livestock feed. Corn's a big livestock feed here in the U.S., so soybeans are a big source of protein. And so, I worry that we're going to get, just like we've gotten spikes in the base metals and the industrial metals and in the energy sector and all those different things this year. I worry we're going to have a spike in the agricultural complex too. And man, we start throwing some really nasty food price inflation onto everything else that's affecting, the 95% of the U.S. population. I mean, it could get kind of wonky around here next year.
As Americans, we think it's our right to spend 5% of our GDP on food, where there's other countries where they spend 45% of their GDP on food. Yeah. And I don't think we're prepared at all for higher food prices. But I know, like, I have my deluxe ham index, which I see what Publix is charging for it, and it was $11.29 a pound for years. It just never went up. Sometimes it would go down. They'd have it on special. You could get it for $10.99. And now it's like $13.29 or $13.59. And that's just one thing. And then we saw the price of a Thanksgiving Day dinner, which had been very constrained. Really, the last time it went up high was in 2011. And we don't really even know what the index is, because it was impossible to know how much a turkey was going for, because a lot of times you couldn't get them. And when you could, they were loss leaders. But when many people paid many times what they paid last year for a large turkey. So something crazy is going on with food. And hey, the way to get to a population's brain is through their stomachs, right?
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Right. Exactly. And then this, throw the political log on the fire for next year. You look at, go back all the way to 2008, right? And Occupy Wall Street and all that kind of stuff ahead of the 2008 presidential election. And then that went all the way into 2016. And then, God, we all remember what happened in 2020, obviously. Well, here comes a midterm election next year here in the U.S., where, the entire U.S. House and a third of the Senate's going to be up for grabs. That the Democrat Party has had full control of that. And so what are they going to do? Are they going to do everything, try to cram through as much as they can in the next 8 months before that election? Are we looking at another period of, increasing social unrest? Like I said, what would food price inflation, what are hungry people, how does that work out? How does that factor into social unrest? So anyway, like I said, I'm celebrate that this year's over, but I'm not overly optimistic that things are going to be more peaceful next year. But I think we've touched on the main factors that will also be impacting the markets, and that's this continued persisting inflation. Even though the Fed's talking about rate hikes, Kerry, they've always admitted it takes at least 6, 9, maybe even 12 months for anything they do in terms of monetary policy to have any impact. So right now they're not talking about hiking rates until June. Well, that won't have any impact on, if they think that's going to control inflation, it won't have any impact till early 2023. So we're going to get continued inflation, and the longer it lasts, the more persistent and sticky it becomes, and inflation expectations begin to rise. And I think eventually that knocks all this transitory, the legs out from under that story. And finally, the metals start to do what we kind of expected them to do this year.
And let's not forget, we have real negative interest rates. If you just go the 3% mortgage, if you can get it, and they put you through the ringer to get a mortgage now, literally crawl up there with a microscope and, magnify everything 1,000 times. I mean, they did a better job than my doctor did recently, who was looking around there. And look, real negative interest rates, 3% mortgage. If John Williams is close to 14%, that means you have a real negative rate of 11%, which means when you buy something, you're getting paid to buy it. System cannot function long term with negative rates. It's been going, it's been going on this way for a long time, but these are double digit real negative rates, Craig. I mean,
Kerry, it's not just here either. Yeah. I mean, Europe, I just saw a chart this morning here on Wednesday of German real yields. For the longest time, with negative nominal rate on the 10-year Bund, of like negative, 0.5% or 1% or something. That they have negative nominal rates all over. Well, they still do. But yet inflation has spiked. And so in Germany, you're getting -5 and -6% real yields. And why is that? Well, because there's no way out for the ECB. All they can do is just keep printing and printing and printing and printing and printing and printing. And how do they do that? They buy bonds and buy bonds and buy bonds that crowd out everybody else, and rates stay negative. The market can't react to the inflation. That's kind of what you're seeing here in the U.S. as well. And so, gosh, you'd think if any country of people would understand, at least have some historical understanding of the impact of inflation, what it does to your currency and your buying power and all that kind of stuff. You think it'd be the Germans, for God's sake. But yet we're not seeing, from what I can tell, any massive precious metal accumulation out of the Germans yet either. So, I've used this metaphor, I guess, analogy, cliche, whatever it is, several times with you. And it gets back to Hemingway's, quote about bankruptcy. How'd it happen to you? Well, gradually, then just all at once. And I think the waking up to this, the realization of where we are and how it's not like what it used to be, I think that realization is gradual and then all at once too. And we'll see if that all at once finally happens next year.
And let's not forget, I think another thing that maybe the Fed has freedom to actually raise rates and taper and all that is because they printed up way more money than they ever expected to need for exactly this instance, to give them the out to actually cut rates, because it won't really cut liquidity because all the liquidity has already been out there.
Yeah.
That's
what $1.7 trillion in that daily reverse repo? I mean, again, so people understand it's not 1.7 trillion every day just going into this pot. It goes in, it comes out, it goes in, it comes out, and it gradually more and more every day. And the Fed is paying 5 basis points annually on that. And they've been doing that since middle of June, just to give that cash someplace to go. Because if they didn't, all that cash should already be sloshing around, in 30-day T-bills or, 4-week T-bills, whatever, and driving those rates negative, just like what we're seeing in Europe. So I think the Fed is counting on 2 things. They're trying to kind of thread the needle. They think that if they step away from QE, that some of that 1.67 trillion that's laying around and going in and out of the repo market every day will actually pick up the slack in the bond market and keep rates from spiking. But I think they also think that if they can play this game about hiking interest rates, that the dollar will rally, and a rising dollar is deflationary. Mm-hmm. So so I think Powell's kind of trying to thread the needle there. We'll see. So far, he hasn't been too successful.
There was one other disturbing piece of news. I think I saw it in Zero Hedge, that China has bought up more than half the world's food supply as a disaster buffer, planning ahead for harder days. What do they know here?
Yeah, right. I mean, we are one hot, dry summer away from not necessarily catastrophe, but some real problems here in the U.S. No doubt about it. And the Chinese been doing that for years. I mean, that's why we always talk about them eventually, starting backing the yuan with some type of hard backing, whether it's gold or whatever, so that they then can assume from the U.S. this exorbitant privilege of being able to print as many yuan as they want, because there's so much demand for it. And then they can mollify the masses, just like the U.S. has done for the last 50 years. They know they got one. Last thing the Chinese need is 1.5 billion people storming Beijing because they're hungry, right? The only way the Politburo hangs on to power is to keep those people sidelined.
Mm-hmm. No doubt that's the case. Yeah, it's a little bit scary. Well, I know you're busy, family obligations, everything else. Just go over to tfmetalsreport.com, sign up for the service. You'll be happy you did. And we will catch up with you after the new year, see how this thing unfolds. But it's beginning to get real interesting, Craig.
Yeah, I would just add one last thing. I've gotten in the habit over the last 5 or 6 years of writing up in the first week of January what I think is going to happen in the next year. Track record was pretty good until this last year. I was doing really well. And it's always a kind of a dangerous thing because nobody remembers, 19 and 20 and what great forecasts they were. All they want to do is, blast me with snowballs and rocks for. We'll do it again. So, all
right.
Putting that together, come by first week of January, stop by TFMetals Report. It'll be a free thing right on the homepage. Anybody can read it.
All right. Sounds good. And if you got a question for Craig, shoot me an email, kl@kerrylutz.com. We'll get you an answer. Craig, have a happy and healthy. We'll talk to you again soon.
Thanks, Kerry. All the best.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.